Hey everyone, and thanks for jumping back into the precious metalverse. Today we're going to talk about gold and silver and kind of look at some of the trends that are going on over the macro scale with both of these assets. So if you guys like the content, please subscribe to the channel and give the video a thumbs up. I would also love to have you join our Telegram channel, which you can find a link to in the description below. So let's go ahead and jump in. So we talked about this regression curve a few weeks ago, and noting that this is more or less our fair valuation fit to gold over the last 50 years. And when we're below it, we tend to be undervalued, and when we're above it, we are overvalued. And the idea is, well, we're just now exiting our fair valuation line, and gold could be going on a run over the next, say, several years that might take us out to maybe 2025, 2026. That could lead us into a gross overvaluation of gold as the economy really struggles to value the dollar with the Fed just constantly printing and printing and printing. So this is the idea. This is a hedge against other assets. When the economy tends to perform very poorly, and you have periods where the dollar loses value, then oftentimes precious metals like gold are a decent hedge and are a small percentage of a lot of people's portfolios. So with that said, the last time we talked about this regression curve, we were noting this trend line here, not much of a trend line, but you get the idea. We showed several of them, but just to guide kind of a general projection potentially over the next several years for gold. And I know this is very optimistic. But we have seen similar moves in the past over during periods where gold just moves up several 100% over the course of, say, 5 or 10 years, and then ultimately retraces back down to the fair valuation line. So currently, you can see that we've kind of poked above our regression line, and we're really starting to move up here. And it's possible that this is just the beginning. Now, what I want to show you guys in this video is, to just pull up the gold chart, and so you guys can see it. You can see that in the last move that gold had that potentially could be resemblant of the current move, it went up 622% or so over about 10 years, approximately 10 years, maybe a little bit longer. So far, if you take from bottom to top, we're up around 75% over the course of maybe like 3 or 4 years or so, about 4 years, or actually almost 5 years, so about 5 years or so. So, if we are repeating a move similar to this one, I don't think it would be quite as explosive and last as long, but if we are repeating it, then you can see that we could just be in the beginning stages. Now, one of the interesting things, right, is silver had quite a move today, and we've spoken about silver before in terms of modern portfolio theory. We looked at it with regards to gold, palladium, platinum, and silver. And one of the things that with these precious metals is that their ratios to each other can tell a story. And if you look at the gold silver ratio, you can see that for the most part it is between a ratio, and this is gold divided by silver, so 84, approximately 84 down to 43, and this is where it spends the majority of its time, the ratio. You can see that there was a time in 2011 where it briefly went below, and then recently we briefly went above. But the idea, right, is if silver is completely undervalued with respect to gold, and is going to start making a run with respect to gold and bring us back down maybe to this kind of our trend line over here over the next few years. And for those who are unsure about precious metals, you don't actually have to to purchase the physical assets. You can always purchase or say invest in ETFs or whatever it may be that basically track the prices of the metals that you're interested in. So if you are interested in that, you can certainly invest in them without actually having to say take delivery on them. If that is something that interests you. And I think it is, for me personally speaking, I mostly have my portfolio over stocks, a lot of index funds, cryptocurrencies, and a few other things. And there is a small room, a small portion allocated to precious metals, mainly because I recognize how fragile the economy really is right now, and I think it's just a good hedge. At the end of the day, it is a good hedge. Generally speaking, the markets, traditional markets, do tend to outperform precious metals. If you look at, say, like the Sharpe ratio of a precious metal portfolio, it tends to be fairly low, which means that your risk-adjusted returns on holding precious metals would be fairly low. But that doesn't mean that potentially entering into the precious metal, entering into that part of the universe in terms of, say, investing, it could be one of those things that it's good to time it. It's good to time it during economic uncertainty, where times like this, where you see the economy taking a huge hit, but yet stock prices are still soaring. Tech stocks are just going crazy right now, and it is somewhat resemblant of past bubbles in the market. So just takes it into consideration. I don't personally have a ton invested in precious metals. It's only a few percentage points of my overall investing portfolio, but it is something that I do think can really be a good hedge. And as far as gold and silver go, I mean, gold is certainly already on a run. Silver has been consolidating for a while, and today it saw quite an explosive move in a single day. So in the future, we're going to actually publish risk metrics. The next time I make a video on precious metals, it'll likely show these risk metrics that I make for a lot of different asset classes and a lot of different coins, like cryptocurrencies. We're going to apply that to precious metals. So do subscribe to the channel if you guys want to see those. I'll try to get those out within 1 to 2 weeks at the very latest, so that you guys can follow it. And it'll show the precious metal risk levels for gold, silver, and then the gold-silver ratio. And this is just a way to try to time your entries and exits of the market, and doing it dynamically. So this is the general idea. I hope you guys enjoy these discussions, like what we're covering on the channel. We're expanding some from just looking at cryptocurrencies and trying to talk about some of the other asset classes, because there's a whole world of asset classes to really start looking into and to analyzing, because we haven't actually spent that much time doing it on the channel. So we are going to start really expanding, as you have seen over the last month. So of course, we're going to cover gold, we're going to cover silver, and obviously we're going to cover palladium, because palladium does really have a nice price history and has outperformed a lot of other precious metals over the last few years. So these are the main ones we're going to cover. Please subscribe, because I think over the next few years, we could really see these precious metals really start to reclaim some of their prior glory. Back in say 2011 or so. And certainly this ratio here is really interesting, because we don't usually spend that much time at the top of this range, where the gold silver ratio is approximately 84. You can see we hit it once here, once here, once here. This time we kind of went over it, similar to how we went under it over here. But if I had to guess, again, this is not investment advice. If I had to guess, I would say, it's more likely than not that, the gold-silver ratio will start, coming back down over the next few years. So we're going to follow that on the channel. If you guys like the content, please subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.